Morning, everybody. It is September 5th, 2024, and the market just opened. So we're going to take a look at the 15-minute chart, 60-minute chart. First, the 60-minute chart. I don't pay as much attention to the 15-minute chart, but it's kind of important for context. I think it's pretty clear. We obviously had a pretty big sell-off here, and we've been going sideways. Now, what do the bears want? Well, the bears are hoping that this is basically just a bear flag and that this is still the dominating force in the market. I think it's fair to say that this is still the dominating. Oh, it definitely is still the dominant force in the market. So the bears are hoping this is just a bear. This whole thing is just a bear flag, and then we're going to get a big second leg down. So maybe one pullback and then some sort of second leg down. On the 15-minute chart, you can see we're basically just in a trading range. Again, I pay a lot more attention. I think a lot more about the hourly chart than I do about the 15-minute chart. But trading range on the hourly chart, trading range on the 15-minute chart, and oh, sorry, this is the 5-minute. But it's not going to be any different, right? Trading range for most of yesterday really was, you could argue it was a parabolic wedge and then a trading range. A parabolic wedge, and then a bear trend, a bear channel, but it wasn't a very strong bear channel. This is the type of bear channel that's going to convert into a trading range. And obviously, like I mentioned in my review yesterday, if you sold the close of this bar, are you excited about this follow through? Probably not. So you can see the bears who sold below, they were disappointed with how this went, and they were using this bar to buy back their shorts. So it's possible we get a decent rally today. Bulls, the target would be the 830 low. You can see we already overlapped with the 829 low. So the 830 low is a possible target. So that's probably where the bulls want to get to. Do I think we get there today? I don't know. Where is that? 94. Probably not. That would be a pretty good bull trend day. However, you can see on the 5-minute that area is the start of this bit broad bear channel. You could argue this whole thing is a bear channel. Bear channels and bull channels in general, will last about 2 days or a couple hundred bars to 100, 200 bars, or 200 bars, something like that. I don't remember the exact stat. I'm a little rusty on the exact stat, but it was 2 to 3 days or roughly 200 bars was what the stat was for that. So what are we doing on the open here? Not much. We're going sideways. I think that it's probably best to treat today as if it's going to be a trading range open, because yesterday was a trading range day. So I think there's really no rush to do anything right now. I think the traders, let's adjust my monitor a little bit. I think I think there's no rush. So what do the bulls want? Well, again, they're hoping that this might have been some sort of trend line break and we're getting some sort of major trend reversal, but I think it might have happened yesterday. So that argument might be losing validity. I think the bears can argue that we're still in a bear channel. However, this high went above this high, and I don't think that's all that great for the bears. So to me, maybe we're in a trading range that started over there, and this is going to be the trading range. So what do I want to do? Well, I'm open to one of two things. Remember, on the daily chart, it's still possible that this bear bar, this is just a pause bar, and we get a giant bear bar here. It's possible. It's not probable, but it's possible. So for me, if I'm looking to sell, you would either need a pretty dramatic start to the day for the bears, unlikely, or some sort of pullback up into this area, maybe up to around the 37 high, and then a double top, maybe a double top with bar 38 yesterday, something like that. So that's what I would need to sell. To buy, I want a reversal up from around yesterday's low. If we start to go sideways, let's say we rally a little bit and go sideways from here, definitely an increased chance of an inside day today. So bar one, a bear bar, it's a bear reversal bar closing near its low, but it's really not that good. Possible low of the day, but only 20% chance in general that bar one is the low or the high of the day. So do you really want to sell below bar one on the 20% chance that we end up getting a bear trend from the open? Probably not. I think there are more sellers above one than buyers. So I think the traders who are selling above one and willing to scale in will end up making money. However, I don't think the bulls are, I don't think the bears are all that eager to sell on stop orders. You can see there was buyers below, and we're immediately probably going to go outside up. So if you sold below one with a stop above one, you're probably immediately about to get stopped out. So really not all that great. Sorry, I'm just looking at some stuff right now. Okay. Um, so we have an outside up bar for the Bulls. It's, it's good for the Bulls. It's a possible low of the day, but again, I don't think it's really all that likely. There's really no rush to do anything right now. The context of today is not overly bullish on the daily chart, and it's not overly bearish either. So I think it's probably really just best to treat the day as a trading range day and a trading range open, and look to enter. Be okay with waiting a lot and entering later. I think it's the best thing you can do this morning. So large outside up bar. The Bears, maybe they sold here and they scaled in. So you see what just happened there. The Bears, they sold the high, they scaled in 5 points higher, and they made money. So it's a trading range open. So as I mentioned, I thought there'd be sellers above one scaling in higher, and that's exactly what they did. So it wasn't great to sell below one on a stop order. However, the bears who sold above one on a limit order and scaled in are able to make money. And that is the definition of a trading range. So what do you do with bar two? Well, it's a pretty large bar, a reasonably large reversal up, 15-point bar. So pretty big bar, but I don't think there's very much to do. The bulls are hoping, it's a very small gap up, but they're hoping it's the start of a bull trend and that we're going to get some sort of bull trend from the open. However, I'm really not all that confident. It's three pushes, 1, 2, 3. So a possible wedge, however, oops, sorry, I didn't mean to change this screen. I was just checking out a stock. My bad. Sorry about that. All right. So, anyways, big tail on the tops of one and big tail on the top of two. If we have another bar with a big tail on three, it could be some sort of micro wedge. You have to keep that in mind as a possibility. Again, what if three is a bull bar closing near its high? I think we're always in long if three is a bull bar closing near its high, but is it always in long by the close? Not really. It's just always in long, meaning it's going to be a flip too, right? So if bar three closes on its high, it's more clear that it's always in long. However, when the market flips like that and you're in a trading range, you have to be expecting that that's going to be towards the top. So sorry, let me rephrase. When the market has an always in long flip, so let's say three is a bull bar closing near its high. Say three looks like bar 15 yesterday. That's good for the bulls. However, in a trading range, when the market flips to always in long is usually when it's about to reverse. So even if three closes on its high, you could buy it, but you're buying it and you're willing to scale in is what you're doing if you're taking that trade. It's probably better just to wait and take the scale in buy rather than buy that high, because look at all the overlap, right? So overlap is a really key concept. And if you look at how much overlap two is going to have with three, even if three is a good looking bull bar, I think three might be an inside bar. So it's an IOI pattern on the open inside bar. So one is inside of two and three would be inside of two. You can really look at an IOI pattern as just an OI pattern, because if, as long as bar two is an outside bar, you don't really have to call bar one an inside bar, but it doesn't matter what you call it as long as you recognize the pattern and see that it's breakout mode. You can make up all your own names for every single pattern if you'd like to, as long as you recognize the patterns for everything. My buddy and I, who we've traded together for years. We don't trade together like on the phone, but we started together, and he's a trader and I'm a trader. And he mentioned to me the other day that I technically use the wrong term for certain types of gaps. So micro gaps and tick gaps. And I call micro gaps, and I call tick gaps micro gaps. And I basically said, he said, you should stop doing that. And I basically said to him, doesn't matter what you call it. This would be an example of a micro gap, the 12 high and the 16 low. And I just call that a gap. And then tick gaps are when the market, let's say on the close of 22, The market gapped down a tick. Oh, here it is. A tick gap would be the close of 37, and then it gapped up on 38. So that would be considered a tick gap, but I call that a micro gap. But again, it doesn't matter what you call it. Call them tick gaps, call them micro gaps, whatever, as long as you understand what's going on in the market. So not a lot of energy to the upside here on bar three, right? It looks like we're somewhat stalling. So again, I'm probably gonna be pretty patient today. I don't think I'm gonna trade in the first 6 to 10. I don't know about 10, but I'm not gonna take a trade probably in the first 6 bars. I'm gonna be really patient and wait for some sort of very specific setup. Again, we have a wedge 72, 77, 2. So if we start to sell off, get a couple legs sideways to down, maybe look for a reversal up from around yesterday's low or the 69 low, with maybe a double bottom with yesterday's low, so bar 69, maybe a higher low double bottom. You could also argue it's a wedge 61, 77, and 2, something like that. So nothing to do here. So it is an IOI pattern, so it's a breakout mode pattern. It's theoretically a buy above 3 and theoretically a sell below 3 in breakout mode. However, it's just better to wait. So the bulls are hoping that we trap the bears in bar 1 and that we have an early low of the day and that we're going to get a big reversal up. What do the bears want? Well, the bears want to see bar 3 fail. Again, it wasn't really all that strong, so probably the traders selling above 2, scaling in higher might make money. 2 is the neckline. It is kind of and neckline's probably not the right word, but anyways, it's the top of the breakout mode pattern. So it's important how the market behaves around the bar 2 high. If it rallies strongly and we get bull bars closing near their highs, that would be really good for the bulls. But it seems like it's failing. So if it fails, then that would be pretty disappointing for the bulls, and we might go lower. Let's see if the bears are able to make a 5-point scalp. So the market needs to go basically. If this market becomes a bear bar at any point, then the bears who sold above 2 are going to be able to make a scalp. So the moment 4 becomes a bear bar, if it does become a bear bar, that means the bears who sold above 2 were able to make a 5-point scalp. Why is that important? Because if limit order bears are making money, then it's less bullish. So okay, so limit order bears made money, right? Limit order bears were able to make a 5-point scalp, which to me makes this a lot less bullish. Could be a micro wedge, 1, 2, 4. Could be a bigger wedge, like I mentioned, 66, 77, 4. Could be a wedge, 61, 77, 4. So I think there's a lot of, I don't know if I mentioned it, so I'll just draw them. It's just easier. This could be a wedge. 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 So any of those could be a wedge. So, it's important to notice that there's a lot of ways to draw the wedge. That means there's more algorithms that will see the wedge, because some algorithms, they won't see this wedge. They'll see this wedge, and some algorithms vice versa. So the more ways there are to draw said wedge, the better of a chance you have of it working. Again, that's why it's important to notice subtle things, because a lot of the algorithms in the market are only noticing, very small, minute things. And so the more of the minute things you can notice, the more algorithms you're going to find yourself on the right side of more often. So not much to do here. If 4 closes on its low, can you sell it? Yeah, you can definitely take it as a potential high of the day. Am I going to? I'll say TBD, but probably not. Sorry, I'm just thinking right now. It's definitely a possible high of the day. Anytime there's a possible high of the day, I do like to just enter. But my problem is not overly bearish right now. and I feel like I'm selling a little lower than I'd like to sell. Maybe I'd like to sell a reversal up from higher. If you do take the sell, you know it's probably not going to go straight down. So you do have to keep that in mind. Okay, so getting bigger, more bearish. But we're right on a flat moving average. So that's a problem. If 4 closes on its low, it is a credible swing sell, but it's a big bar, big risk. You might be selling lower than you'd like. So I'm personally, I think, going to sit out. I'm not sure it's even going to close that strong. So the IOI failed breakout above, and we're getting a big reversal down. But I don't know. Doesn't seem like it's worth doing anything to me. Are we always in long or always in short? But 4 had the potential to flip the market to always in short, which is one of the reasons it's a possible high of the day. But to me, maybe a little bit more always in long, but a lot of wedges to draw. So it's not strong at all. It might, yeah, I think we're always in long, but it's really not great. I'll be back in like 10 minutes. So we have a trading range open. And, what do the bulls see? Well, the bulls are hoping this is the low of the day. We have a double top with 2 and 4, and we have a double bottom, a higher low double bottom. You notice we keep getting higher lows and higher highs. So we have a double bottom with 2 and 5. However, the thing you got to think about is, if you're buying above 5, you're hoping we've seen the low of the day. I think it's a trading range open, so it's probably a little bit better to look for, this looks like a leg up in a trading range. We might get a leg down in a trading range. So I would like to see some sort of leg down here over the next couple of bars and then get a reversal up and buy that as a possible low of the day. I'd be more open to doing that. Can you buy bar 5, put a stop below 2 and just hope? Maybe, but it's kind of gambly. I don't think math is all that excellent, and I would just rather wait. So I'm hoping we go down a little bit and we get some sort of double bottom with bar 2 that I can buy for a swing. If, let's say, 6 closes on its low, it's going to be head and shoulders top, the smaller head and shoulders top, but 2, 5, and what would be 7 would be a head and shoulders top. So you could do that. But again, I would just rather wait. We're getting closes. We keep buying the moving average, and the bulls have the best closes so far today. So you do have to keep that in mind. What if we get consecutive bull bars closing near their highs? Well, it kind of depends. If we break out above bar 4 and get a strong bull bar closing near its high, that would be a little bit better than if we, got a bull bar closing near its high here that did not break out above 4. So you want to, if you're looking to buy above bar 6, you want to see the market do something pretty dramatic here. And I don't think that's going to happen. Sorry, I'm a little bit distracted right now. I really like the Rubik's Cube, and it's one of my little. I keep a couple of fidget toys on my desk, and I got a new Rubik's Cube yesterday. It's like a speed cube, so it moves just so much more fluidly than any other cube that I've ever had. And so it's just a really fun. I don't know. It's a really fun puzzle to figure out. My best time is 24 seconds, but I haven't hit that in a while. I got kind of lucky when I got that one, so. Usually I'm trying to keep it under 32, 33 seconds, but I hadn't done it in a little while because my speed cube that I had before was really old and worn out, and so I bought a new one the other day and it just came in, so it's using it nonstop basically. But it's really fun. I really enjoy it, and I buy all sorts of weird cubes. I have a 2x2. I have what's called a mirror cube, which is shapes instead of colors. It's really fun. But anyways, so bar 7 looks like we're getting a surprise. Not that surprising considering, we've had a bar 7 surprise every day this week. So Tuesday, Wednesday, and Thursday, we've had bar 7 surprises. Not really that surprising because of how often we've been getting them. So is bar 6 by the close? I don't know. I mean, we've been staying above the moving average and we're getting higher lows and higher highs, and that's important. But I don't think that it's all that great or all that clear just yet. It's possible bar 5 is the swing of the day, um, but I stayed out of it. I don't think it was unreasonable, but it was just a little. It just wasn't quite what I wanted it to be, so I just stayed out. So what do I think is going to happen? Well, we might be forming some kind of wedge, 1, 2, 3, but even if we get it, it's going to be a minor reversal. So I want to see a minor reversal down and buy lower. Like I said, it's not wrong to be long right now. But we are always in long. This is kind of the thing about always in trading is like, sometimes you're going to be in the right spot, and you're going to when it's not all that good, it's going to become good really quickly, and a lot of traders are going to get trapped out. And I'm one of those traders who's trapped out. So yeah, we were always in long, 2, 3, still always in long 5. So it's not wrong to buy above those bars. However, it's just a bit difficult. But it's earlier in the day, so it's a little bit more okay to take chances in those situations. But for me, I did not buy above 5. So it's possible this was a vacuum test of yesterday's 37 high, and we might be getting a double top 38.7 or 38.8, depending what we get here. We'll see. What do bears want? Well, they want to put a tail on the top 7 and get a micro double top uh, with 7 and 8, and a bigger double top with 38 yesterday and potentially bar 8 today. Neckline would be the bar 69 low. The neckline is the uh, lowest price between the two areas of the double top, or the highest price between the two areas of the double bottom. We're only 2 minutes into this bar, and it's pretty large, but growing a lot. So I'm not, I'm not willing, or I don't think a lot of traders are going to sell up here. This has potential to keep growing. Reason being, we're relatively bullish. I think that the bar 19 close yesterday is a possible target. So I don't think a lot of traders are going to be looking to sell in this area. Something to pay attention to is if limit order bears who sold above bar 4 and are scaling in whatever 5, 10, 15 points higher are able to make money. Probably 60, at least 60% chance, maybe 60% chance if this closes on its high. We've seen the low of the day. Um, I'll be interested. This is an important bar, right? If 7 closes on its high, then this is pretty bullish. Even if we get a reversal down, minor. But if 7 closes somewhere down here, we might end up going down for a couple legs. So for me, I'm just going to wait and see what happens. I said trading, obviously, it's a very big waiting game. It's 90% of trading is just learning how to be patient enough to wait for your setup, and then being focused enough to enter when your setup does come. So it's never fun to miss setups because you're distracted, but it's kind of inevitable. So you can always just enter later though. But it's definitely difficult. The bar still, it's been near its high for most of the bar, which is pretty strong for the bulls. They're trying to keep it that way. There's probably going to be some sort of tail on the top, I would imagine, but it doesn't seem like it's going to be all that big. So where are we going from here? Well, 7 is a biclimax. So the biclimax low, the bar 7 low, is going to be a target. You do have to keep that in mind. Like I said, we've had surprises on bar 7 the past couple of days. So pretty interesting to get another one here. Very possible we've seen the low of the day. Um, so what was that daily chart target that I mentioned? Well, this low right here. And, it's around 5,600, so it's pretty far above. However, this is a really strong bar on bar 7. So it's possible that we've started a bull trend and that the bulls want to get somewhere up here. Do I think it's that likely? Not really. So maybe 40% chance that we've started a bull trend. What is going to be a massive indicator as to whether this is a bull trend or a trading range? Once we pull back, are we going to close this gap with the bar 4 high? So that is going to be really important. So what if 8 is the bull bar closing on its high? Good for the bulls. Consecutive bull bars by the close, always in long. Probably, well, we're obviously always in long, and it's probably theoretically by the close if you can use a wide stop. What if 8 closes on its low? Then you probably just get out. If it, at this point, it would be a micro double top with 7 and a bear bar closing near its low. So I would just probably just look to exit if 8 can close on its low. So am I going to buy if 8 closes on its high? It's not wrong to, and I don't have anything at all against buying, but I would just rather wait to see the pullback and see if the pullback overlaps with the bar 4 high. So I want to see a bear bar here and then see if the bears can get it to overlap with the bar 4 high. And if it doesn't, then to me, that's pretty strong for the bulls, and it's possible we started a bull trend day. So I'll buy it for a swing up if that is the case. Again, keep in mind on the 15-minute chart, I'm sorry, the hourly chart. Let me just pull it up. The bulls, they want, so bear trend, trend line break, pull back, and then they want to start the bull trend. They're hoping this is a major trend reversal. But this is your signal bar. So this 8 o'clock bar is your signal bar for the major trend reversal. And do you want your major trend reversal to start with a bad signal bar like this? Probably not. Keep in mind, this is the 10 o'clock bar. So this bar has basically 53 minutes left. We're only 7 minutes into this bar and the size of this bar. So you got to be thinking, is this going to become 150 points or something like that? Or is it probably going to stall? So maybe it gets vacuum test up to here, but it's probably going to end up stalling. You have to keep that in mind. So pretty interesting bar here. What if 8 closes on its low? I might sell it. It's very possible. Got to be pretty much perfect though. But it's going to be a credible swing sell. Probably a minor reversal, but you know that the bar 7 low is going to be a target. So if this can close on its low, it's going to be a credible swing sell. But anything other than pretty much a perfect bar here is not going to work for me. And I don't want it to get too big. This size is fine. Maybe a little bit bigger is fine, but I don't want a huge bar here. We haven't been below the moving average much today, so we have to keep that in mind. And the bears, have done nothing except get trapped so far today. So now I'm selling high enough. Again, if you're selling up here, your argument is that this is a trading range, not a bull trend. Have to keep that in mind. It might be a minor reversal, but I do think this is pretty climactic on bar 7. So if A can close on its low, it's going to be a credible swing. Does that mean it's high probability? No. Swing trade. Maybe a higher high double top with here. But if it is a higher high double top, you have to keep in mind you're probably going to get a lower high before you go too much further down. So looking okay for the bears so far. Again, I think I'm probably going to lose this trade. If it does what I want it to do and close on its low, I will probably lose the trade, but that's fine. I just think leg in a trading range, probably also a leg in a trading range. All right, so I would have sold it if it closed on its low, but it did not. So now what am I interested in? Well, I'm still interested in the gap with the 4 low or the 4 high and the 8 low. So the 4 high and the 8 low is, what I'm paying attention to now. So let's say we get this. So I want this to trade below and trigger. Then let's say we get a bull bar. Then you can buy that, citing possible small pullback bull trend. If you're buying, you're taking a chance that the gap stays open all day and that it's a small pullback bull trend day, which is pretty reasonable. It's going to be a reasonable argument if this gap stays open. So we've traded below 8. So now the question becomes, what are we going to get here? If it's a bull bar closing near its high, that's going to be a credible swing trade. See the hesitation because the bar is not very good on bar 8. So the Bears, they still have the wedge. They still see the higher high double top, etc. But again, disappointing disappointing bar. And sometimes in trading ranges, you get a disappointing bar, and it works anyways. And maybe it does, but for me, I needed a good bar here. So better to just wait to see if you can get consecutive 2 or 3 bear bars closing near their lows, and then look to sell. But I don't know. I think the bar 7 low is the target for the Bears. Well, first off, this is the first target, 4 high. Looks like we're going to get there. And then the 7 low is the next target. And then somewhere down here is the next target. So you can see we just got to the 7 low, or we're getting to around the 7 low. It's disappointing. I think this is good energy for the Bears, but I think that it's ultimately going to be a pretty disappointing bar. It's disappointing for everybody right now. I think 8 closing on its low would have been a really solid swing sell, but obviously not much I can do about it. If it doesn't close the way I want it to, can't take the trade. So keep in mind, we're less than halfway through this bar, and this bar is already 13, 14 points. So if you sold below bar 8 and you got 10 points, I'd imagine they were able to make 10 points. So literally right here is 10 points. So I'd imagine there are bulls with limit orders willing to buy 10 points down because they know the Bears who sold below 8 are probably going to be pretty thrilled about getting a 10-point profit in 5 minutes. So the Bears selling below 8 were willing to scale in because the signal bar was not very good. They were just betting on a trading range day and not a strong small pullback bull trend day. Now it seems like they're going to get at least the trading range day. So to me, probably a trading range day, probably some sort of trading range open at least. What are the odds we get a new low of the day? I don't know. Maybe pretty 50-50 right now. I think the low of the day or the high of the day is probably in. So it's just a matter of which one is it. So the Bulls, I had the screen off for it, but the Bulls who did buy 10 points down. So right here, the Bulls who bought essentially at the low of 9, betting that Bears who sold below 8 are going to take some off at a 10-point scalp. They were able to make 5 points during bar 9. So it did bounce back up to like somewhere in this area. So they were able to make 5 points. And we'll see if they can do it again. Bar 10, it seems like they're going to make 5 points either way, but even if 10 goes down, they still already made it. So what do you do, right? Well, 10, pretty climactic bar. Now we're on support, the moving average, been support all day. However, this is a big enough bear surprise that I think the first reversal up is going to be a minor reversal. So probably better to just wait and see what we get. 8 is still a credible high of the day, for sure. So the Bears hoping it's the start of a bear trend and we're going to get a big swing down, and the Bulls are hoping it's just a vacuum test of the low. And this is probably that it's going to be a trading range, and maybe we'll get some sort of high too. I think the Bulls have a little bit of a better argument. I think, well, first off, the first reversal up should be minor, but we're also going to test the bar 7 close at some point today. I think to me, big up 5, 6, 7, big down 8, 9. So confusion. Don't want to buy too high, don't want to sell too low. Better to just sit out, wait. What can bar 10 do to convince me to buy? Probably nothing. I don't really think I'm going to sell either, regardless. The big bear bar closing near its low, it might be okay to sell, but I'm probably just going to wait. You can see there's not a lot of bearish energy. There's not a lot going on in either direction right now because we're in the middle of the trading range. The exact middle of the trading range right here, right now, bar 10, exact middle of today's range. So I'm not overly eager to buy. I'm not overly eager to sell. Today is looking like Well, so far it's obviously excuse me. So far today is obviously an inside day. It's looking like it might try to stay that way. We keep finding support on the moving average, but I don't think it's going to last. I think this is probably the last time the Bulls are going to aggressively buy the moving average, just because of how many times they bought it so far today. But I mean, this is really not all that ideal. I'm just going to wait. I think bar nine to me indicates trading range, and since we've been above the moving average pretty much the entire day, Bulls will buy the first reversal down of it. But I don't think when we get another reversal down, I'm not sure the moving average is going to hold and be quite as strong of support as it just was. Reasonably good looking bar on bar 10, but I think the location is not very good. Bulls are betting on it being a high one in a bull trend. Just looking at something real quick. Bulls will be betting that this is a good high one in their bull trend, and I'm not that convinced of that. So for me, I don't want to do anything right now. Even if it closes strong, you'd be betting that we're in a bull trend, that nine is just a bull trap, trapping bulls out and trapping bears in. And you're hoping we test at least the bar 7 close. If you do buy above 10, your stop is below the low of the day. So your stop is not below 10 if you're buying above 10. That's kind of a strong stop to put it below 10. And 10, disappointing close. So sellers above, probably a lower high from 8 and 9. For me, I'm not really willing to do anything. This week hasn't been the easiest for stop orders. There's been a lot of reasonable ones, but it definitely hasn't been the easiest. Even the big bear trend day on Monday, who didn't offer a lot of great entries. A lot of them were pretty difficult. I thought anything in here was kind of a difficult entry. Thought this made sense for sure, and that made sense. But there's a lot of reasonable entries. Like theoretically, you can just sell, 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 and sell the market, sell for any reason. Yes, you can definitely do that. But I just thought definitely a bit more difficult of one of the bear trends to get in on, rather than you have occasionally the cookie cutter bear trends where you can just it offers you reasonably easy entries. So looks like we're rallying here on bar 11, but it's not really that great to be buying. We don't have any open gaps. 9, I think, causes a lot of confusion. So if I was buying up here, I'd be a little bit concerned that I'm buying high in a leg in a trading range rather than buying the start of a bull trend. And again, keep in mind the what was I going to say? Oh, right. The market has stayed above the moving average, and we're getting higher lows and higher highs. So we are a bit more bullish here for sure than bearish. However, if you bought above 5 for a potential low of the day, kind of hard to stay long below 8. And, the close of 9, difficult. Not worth selling anything in there, but just difficult. So nothing yet for me to do. And we have been basically above the moving average all day, which is really important. But I think 9 damages the bull's chances of a bull trend day pretty significantly. We'll see what we get on 11. You get consecutive bull bars closing near their highs. That's good for the bulls, but I don't know how much higher are we really going. It'll be a theoretical buy the close bar, but I'm not going to be willing to do that. I would rather wait. We're entering the window where reversals are weird and don't work as often. So, bars 12 through 15, the reversals aren't quite as good. Bars 17 through 20, the reversals end up being a bit better usually. something to keep in mind. So we are always in long. Good strong close on bar 11. Can you buy the close of 11? Yeah, it's by the close for sure. But the question you got to be asking yourself if you're buying this close is, what's your premise? Your premise, if you're buying the close of 11, is that this is a small pullback bull trend. We're starting a bull trend, and if we're starting a bull trend, should 9 exist? Obviously, the bull's done a great job on 10, 11 of reversing 9. But are we going to get a strong close above the breakout point, bar 8? I don't know. So you're buying the close of 11. You're taking a chance. It's not like an overly great chance either that this is the start of a small pullback bull trend. And your risk is big. So you're risking a lot on a trade that's not super high probability. So I don't know. Not for me. What if 12 is a huge bear bar closing near its low? Um, it might be credible, but we haven't closed above the or below the moving average yet today. So I'm not really sure how interested. I would have sold, 8 had it closed on its low. But so much buying at the moving average, we haven't gone below it yet today. That makes me wonder if it's worth it to take any shorts until we can get below the moving average. So not really worth selling anything for me. So if it is a bear bar closing near its low, looks like it might be. It's a wedge for sure, but I don't think it's all that great. I think I would just rather wait. It's definitely a possible high of the day, and it's a higher high double top with bar 8. Possible short, possible high of the day. If it closes on its low. Yeah, I'm not really willing to sell that. What would I like to see? Well, ideally, test down a little bit and then create a double top with 12. I would be okay with selling something like that, but we need to get below the moving average first. I think that's the big hurdle for the Bears is getting down to and below the moving average. 9 was a really strong, really large bar. It was climactic, and it wasn't a good trade. It was a really really big bar, and when you have a bar that big, uh, chances are you're probably going to get some sort of lower high. So 11 is a pretty big bull surprise. And the fact that the Bulls were willing to pay that much, buy at the moving average after bar 9 this aggressively is pretty telling. So the Bulls who bought above 11 were buying possibly just below the breakout point, right? Bar 8 high is the breakout point. So you're buying pretty high up in the range. Bulls might have been more interested in buying 50% pullback somewhere in this area. Well, we never got to it, but you can see bulls are buying the close 12, trying to get the market back up to here. I think a lot of bulls who just bought the close of 12, stop below, are going to scalp out with 5, 10 points. So if you bought above 11 and you saw 12, I would imagine you're probably pretty disappointed. So I'm having trouble. I'm having trouble wanting to buy up here. This is just not doing what I want it to do. So bulls might sell out of their longs here. Reasonable chance this closes as a bear bar. And what's my logic for that? Again, if you bought above 11 and you saw 12, you want to stay long. Were you happy with 12? Probably not. We failed to break out above the high. So bulls might sell out of their longs, and that's kind of my premise for, I'm not taking a trade. I'm not basing, a trade on that sort of premise, but uh, that's my premise for why I think this might end up becoming a bear bar. relatively disappointing bar. You can see still 2.5 minutes left, so it could become could remain a bull bar. But again, that right there, this selling is kind of what I was talking about. But if it's an inside bar closing near its low, I'm still not going to take that. I think weird time of day for reversals. We might get one more leg up, but I'm definitely looking a little bit more to short right now. Just the big hurdle is the moving average. So I want to see a test down, maybe bars 14 and 15, some sort of test down, and then a lower high, maybe 17, 18. That would be ideal for me. But until we get it, not really willing to do anything. So it did end up being a bull close, but not a very good one. You can see relatively disappointing. Again, the bulls who bought, obviously they're disappointed in 12. So that's the logic for what's happening right there on bar 13. So if you're long, you're probably feeling, in danger a little bit per se. Yeah, and I'm probably looking to sell more than I am to buy because it looks like a leg up in a trading range. So I think it's reasonable to trade a leg down in a trading range right now. So I'm pretty content with being flat and not looking to buy unless we go lower and get some sort of leg down, and then you can look to buy a reversal up. We're only 13 bars into the day, so again, no rush to do anything. I think it's totally fine to just be flat. The bulls are hoping that bar 12 was the first leg down and the 13th pullback, and now this is somewhat of the second leg down. They're hoping maybe the bears who sold 12, disappointed 13, are going to buy back their shorts during 14. But I think that's hopeful, not more so than probable. I think if you sold below 12, you were willing to scale in, and you're pretty okay with how 13 looks. So I'm not, it's not as likely that we're going to get a big bull bar closing near its high here. I think it might be more likely we end up getting something disappointing for the bulls. So the bulls are hoping this is just a second leg down, and the bears are hoping we obviously have a wedge. And they're also thinking it is a second leg down. First off, the 14 has qualified as a second leg down for the bears. So even if it becomes the world's biggest bull bar, the bears who sold below 12 still got their second leg down, the tail on 14, allowing them to get out around break even on their first entry with profit on possible scale ins around the bar 12 or 11 high. So again, maybe some bears bought back shorts, and that's what's causing some stalling here. But I don't know. Again, still holding steady above the moving average, and we're still always in long. But it's trading range always in long. Nothing in here screams best trade of the week to me. Best trade of the day, even. Just all looks pretty. A lot of the math just never seemed that great so far today. So I would just rather wait. There's not that much to do. I think we're going to get a good looking swing trade at some point today. So again, 14, just disappointing for everybody. If you're a bear and you're using a wide stop and you're willing to scale in, I think you're probably going to be okay. If you're a bull and you're using a wide stop and you're willing to scale in, you'll also probably be okay. So trading range price action, but I think we're closer to the top of the trading range than the bottom, obviously. So I think, you know, better to scale in as a bear here than as a bull. You can see the rest of the bulls dumping out of their longs below 14, and that's what's causing this. Where are we going to? Well, the moving average, maybe the bar 9 close. This is a buy climax, somewhere around this low. Again, the 9 close. So that's all areas of important support. So again, the moving average still holding for the bulls, but how many more times are the bulls going to buy the moving average? Probably not very many more. So I'm not really all that bullish. Again, the lower we go, the more bullish I am. The higher we go, the more bearish I am. I think it's a trading range. It's a reasonably tight channel up, but I don't know. I would like to see some sort of double top form here. That would be ideal. We'll see what we get. Again, might just be a second leg down. 12 first leg, pullback 13, second leg down 14, 15. So not all that great. What if 15 is a bull bar closing near its high? Well, probably still not really worth buying. Buying probably pretty high in the trading range. Again, bulls bought around the moving average, but do you think they're going to have the same level of enthusiasm about buying as they had on bars 10 and 11? Probably not. So I think 11 is a good example of a possible second leg trap. 5, 6, 7, first leg up, 10, 11, second leg up, second leg trap. No breakout above the bar 8 high is important. Makes it a little less likely to succeed. So really tough to be long, really tough to be short. Probably just best to be flat. What do the bulls want? Again, I think if you're a bull, you're looking for some sort of double bottom with bar 10, maybe a double bottom with the bar 10 low. The bulls have had a few chances, though, to start to form some sort of bull trend, and they keep failing. So I'm not really that sure. I think if the bulls get another reasonably good looking setup, that will be their last chance. And then the bears might take over. It's possible the bears just take over right now and we get some sort of double top. I don't think we're going to sell off straight down. There's a lot of trading range price action. But we'll see. Looking like it's going to form a bad high 1 for the bulls. So, how confident are you, if you're a bear, that 15 is going to work? I don't know. It's a good looking bar for sure, and it is again a possible wedge. But with the tail on 15, etc., I'm not really that willing to sell directly below it. Some bears will sell below 15, taking a chance we've seen the high of the day, and they'll put their stop above 12. Are they selling a full size position? No, they're selling small. We're around the middle of the trading range, so they're selling small and they're willing to scale in. I really would like to see some sort of bull bar here and then us get a lower high. If we do get a bull bar and then we do get a lower high, I would be willing to short. But I don't want to sell 12. I don't want to sell 13 or 14. So the whole thing is obviously, a little bit difficult. So we might sell straight off, but I think the entries were really not that great. I'm looking back right now, and I have a tough time convincing myself that real time I'm interested in selling below 14. Again, I get the logic of trading range, small bar, small risk towards the top, cool. But I don't know, 15 right on the moving average. Again, the bulls have bought there all day. The moving average was not as big of a concern there, but I thought 15 was fine. You could have sold 15 for sure, but I was hoping we were going to get some sort of double top, but it doesn't seem like we're going to. We're hoping that we're going to get a big double bottom with bar two and a higher low double bottom, but I don't think that's going to happen. I don't think that's going to be as credible. Remember that 30% of the time when you get a double bottom, the second leg is a sell climax. So you have to keep that in mind. I'm looking to sell, but it's looking more to sell a pullback. This is kind of, I mentioned a lot on the way up. I was a lot more interested in selling, but again, sometimes the market doesn't give you the entry you want. That's fine. 16, really big, getting climactic. So a lot of the bears, they sold small below 15, right? And they're taking a chance that we were going to sell off, or they were going to have to scale in. They were fine with either. And suddenly, a couple minutes later, 2 minutes later, they're sitting there with a 10-point profit. And what are they thinking to themselves? Well, I didn't think we were going to go straight down, but now I have made a quick 10 points. I'll probably just end up taking it. So there was a little bit of profit taking there. That's probably due to those bears. Can you sell the close of 16? Yeah, but I don't know. It's kind of tough. If you do sell the close of 16, you could probably just throw a stop above 16. I mean, it's not, theoretically the stop is above 12, but if we trade above 16, your premise is not valid. So that hourly chart that I mentioned earlier, right? Oh, sorry. Hold on. Give me a second. So I mentioned early in the hour, a lot of time left, and look what ended up happening. So this is actually a credible sell signal bar for the bears, I think. This is possibly the start of the bear trend if this bar closes on its low. So it's pretty important how this hour closes. This could be the start of a swing down on the hourly chart, thus a swing down on the 5-minute chart. So I think the context is reasonable to sell below 16, but you need to be pretty quick to make decisions if you're going to do that. I might do it, and I'm basically going to give it one bar to sell off because you're selling the bottom of a trading range with big risk. That's not great. Tempting. Yeah, I don't know. I'm going to leave it alone. I'm just going to leave it alone. You can get a bull bar here that can be the problem with 16. There are certain trades where it's okay to take them, and they're somewhat marginal, but you can usually get out pretty quickly without a big loss. But the problem with 16 is if this can go against you, and it can go against you pretty quickly. So you'd have to be really really quick to get out because sometimes 17 is a really really big bull bar, and you're just stuck in the trade. But I think 16 is a credible sell, but stuck on the sidelines. Might sell small. I sold small. I'm not all that enthusiastic about this, but I think it's credible. So even if this goes pretty far against me, which it very well might, I'm not going to lose very much. So again, I have a small position. My stop's above 16, but I'm probably not even going to let it get hit. If we get any sort of bull bar on 17, I'm just going to get out. As confident in my ability to exit in the middle of the bar. So that's why these trades are iffy for me, because a lot of times when you exit in the middle of the bar, you end up over trading and overthinking everything. But you can see we're 2 minutes in and this isn't doing what I want it to do. So I think the key here is to trade small enough that if you don't get the bar you want, and you get something that's pretty far against you, then you just whatever, and you lose a little bit and you move on. But this is not the area to take big chances, so to speak. I'm kind of taking a chance that we're going to see a bear trend day here. So it's a swing trade for me, and I want a measured move down. We just broke below the low, or we did earlier bar, but taking a chance we get a swing down, maybe a measured move. My risk reward profile 2 to 1, so it's okay to do it. Whatever, trying to make 30 plus points, risking. Again, I'm risking 15, but it's pretty rare for me to let this stop get hit. So, what am I going to do if this is closes like this? I'll probably stay in, but it's not what I want. So I'm just kind of considering right now. I took it as a swing trade. First off, the stop above 16 is not you have to learn the difference between theory and I think trading theory. People confuse trading theory with trading reality. There's a difference. Theory would be you're selling below 16 and you're putting your stop above 12, and you go take a walk and you take a chance that we get a measured move. It's theoretically okay to do that, but optimal, optimal is reality of if you want to be profitable, and that would be you could sell below 16, but you got to be quick to get out. You got to be quick to make decisions, and you're probably just going to have a stop. Realistically. Sorry, I'm looking at an inverted chart. So if I'm talking about bulls right now, I meant to be talking about bears. So theory is you sell below 16, stop above 12, and or maybe whatever, stop above 14 and take a chance, whatever 60% chance you're thinking, but it might be at the bottom of the trading range. So optimal, if you're short below 16, you're out quickly. And I might. This is why these trades are tough, because what do, right? Any sort of bull close, I'll probably just exit. It's not what I want. Then I'll look to sell a pullback. Still always in short. Hmm. Well, there's going to be sellers above, but sorry, I'm thinking. All right, I just exited. Why? Because if I was selling below 16, taking a chance it's a bear trend day, and you get 17, what do you think of that? Nothing. It's not what you wanted to see. You wanted to see a much bigger bar. So I exited, and again, even if it had stopped me out, it would have been a small loss. So this loss I took from here to basically here was more like less than like a commission basically. Um, I'm just putting some stuff in my notes. Does this mean that it's not going to be a big bear trend day? No, but I thought that usually if you're going to get a uh, a bear trend day out of bar 16, then 17 is going to be a big bear trend bar as well. And if 17 is not a big bear trend bar and it looks like this, usually 18 is going to collapse basically on the close. And instead, more and more bears are buying back shorts. So it's okay to just look to sell a pullback now, something like that. So look to sell some sort of low two. But I'm back to there's no rush. Might be some sort of expanding triangle open. Again, you can be short. We're always in short, but again, you have to worry about the problem with always in a trading range. So you have to worry about if this is a trading range and we're clearly always in short, then that might be where we reverse. So my problem here is the downside seems limited and you can get a really disappointing bar really quickly in this type of situation. So am I going to sell below this bear bar if it closes on its low? No, probably not. I'm too concerned that we're at the bottom of a trading range. Nothing wrong with being short. We've seen the high of the day, pretty likely. Maybe 80% chance. So can you be short and take a chance that this is the start of the bear channel? Yeah, you can do that. So you could argue spike 14, 15, 16, pullback 17, and then bear channel start 18. But I would still be short small right now, looking to add on. Again, there's going to be sellers above 17. No one's interested in buying above it. So 18, a good looking bear bar. Can you sell 18? Yeah, I think if you sell 18, your stop goes above 18. You're just taking a chance we collapse and that this is still the spike phase. It's a reasonable swing trade and the risk is smaller. Um, Considering it. Okay, I entered and I'm just going to let myself get stopped out if I do get stopped out. Let me adjust some stuff and then I'll talk about my logic a little bit. Okay. So for me, I was willing to sell below 18 because I sold below 16, taking a chance it was a bear trend day. What was my problem with 16? Well, the risk was massive. So it was a swing trade, but I just didn't love how it looked. And then you get 17. Hold on a second. Okay. And then you get 17, and that's kind of disappointing. And you're wondering, well, our trader's going to buy back shorts. And if they buy back shorts, I'm stuck in a trade with big risk. And then you get 18, an outside down bar, breakout mode bar, offering you small risk. And when you have small risk and a reasonable chance of a bear trend day, I didn't think that, there was an unreasonable chance of a bear trend day when we got 16, but the risk was too big for me to justify it. So I had to be out quickly. However, when we got 18, I think now I think, very reasonable chance of a bear trend day, and I'm just going to stay short. Um, so there's two ways to manage that trade. You can kind of micromanage it. What I did, it's harder though, or you could sell 16 and just consider yourself an always in trader. That's fine too. So I'm taking a chance, thinking about the hourly chart mostly, right? Taking a chance that the traders who took this short are going to do pretty well. It's a swing trade. Some traders might scalp it, but for me, I think it's an okay swing trade. Stop above 18 is fine, and maybe look for a measured move down somewhere down here. But so what's happening here? Well, might have been more. Some traders are scalping out. They got a quick 10 points. They took it. Not an unreasonable thing to do, but I think this has potential to go pretty far. So, there's two ways to trade. There's scalp, there's a million different ways to trade, but scalping and swing trading, if you wanted to really encompass everything. And the thing about scalping is you'll make quick profits. So whatever, you buy above 5, you scalp with 10 points. Maybe you sold below, and these are theoretical. You sell below this, you scalp that with 5, 10 points. You take limit orders, you scalp. But if you sold this, you might scalp as well, and you might miss out on a large profit, which is fine. That's kind of your plan, right? But you're going to make money more frequently, but you're going to make less money per trade versus making money less frequently, but a lot more money per trade. So swing trading is easier on your decision-making process, but it's harder to do mentally, it's harder on your emotions, I think. And scalping, you win a lot, so it's a little easier on your emotions when you're winning all the time. But this is a swing trade. Again, if we go below 18 and I get stopped up, that's fine. Sorry, go above 18 and I get stopped up, that's fine. Nothing for me to do here. Obviously, 19 is disappointing, and so some bears might take profits, and that could cause a pretty big bull bar on 20. For me, though, I am staying in this trade. So I'm willing to die on the hill right now that it's a possible small pullback bear trend day, or we're going to get some sort of spike in channel. And if we do get spike in channel, we shouldn't go above 18. And I'll just allow myself to get stopped out. Obviously, this is not what I wanted to see. I wanted to see it closing a lot stronger, but we didn't get that. So if it is the bear trend day or some sort of bear trend, we shouldn't get above bar 18. So I'm going to take a minute and pause the video. But ultimately, if we trade above 18, I'm just going to get stopped out, and that's fine. So I hope 20 is a big bear bar. Probably won't be. So I'm probably going to end this video pretty soon. I don't think I'm going to make money on this trade. If I do, it probably won't be very much. I sell below 18. But I'm kind of just going to move my stop along with the higher lows and lower highs. Along with the lower highs. So let's say we trade below 17, get a close somewhere down here. I will then put my stop right here above the bar 20 high, currently above 18. And until then, I don't really have anything to do. I'm just taking a chance. We're going to get a bear channel down. What's my profit target? I don't know. I don't really have one, to be honest. I'm kind of doing this as an always in trade, maybe a measured move down of the spike would be reasonable somewhere down here. So I think you could do that. But I think for me right now, the best thing to do is nothing. Just sit in my trade and let the market go. Just ignore the noise, basically. So I'm trying to make, I'm trying to think about like a profit target. I don't want to do 20 points. That seems too small. 30 seems reasonable. Part of me wants to just like go for 50 or something really aggressive. 'Cause this could definitely be a big bear trend. We have the gaps for it. So at the close of this bar, I'll probably just put a stop here. And I think I will be, again, I think I'm going to end the video on the close of this bar. But I just want to see how it closes, talk about my management and my plan a little bit, and then end the video. So realistically, it's probably fine to just pull my stop below 20, 21. It's the same high, 20 and 21. But I want to see it close below 19, be a little bit more technical with it. But we're not trading up here if my thought is correct. But this was a spike. This is a pullback. So bears are hoping we're starting to channel. So I am going to pull my stop to above 21. Sorry, can't seem to figure it out. There we go. Pulled my stop to above 21. And I'm just going to ride this out. We'll see what happens. It's a swing trade, and it has potential to be a very large profit. Not sure it will be, but I'd say you can go as far as say it probably won't be. But there's enough potential that it's okay to just sit in the trade. And if 22 is a huge bull bar closing on its high, that's fine. Let's get out. But yeah, all right, that's going to be it for this video.